Wonderful good day, ladies and gentlemen, to the mining news on Commodity TV. The uranium price is still trapped in its trading range of 80 to 85 US dollars per pound. We shortly saw it below 80, but I think this will change soon. However, with every week of waiting on the part of purchasers for nuclear power plants, things are getting worse because the uranium deficit continues to grow and is not getting any smaller as new power plants are constantly being connected to the grid. Old power plants are being granted longer operating times, and small modular reactors, the SMRs, will soon be coming onto the market from 2027 onwards like Oklo, which will further fuel demand. However, new mines are slow to go into production, and it will still take a while before full operating capacity is reached, as is the case with Uranium Energy Corporation, but they are in production since August this year. Kazatomprom has also significantly lowered its production targets for this year and 2025. In addition, there is a supply contract with China, so that a lot of material is no longer available to the West. Uranium royalty is now of interest here. The company is acquiring an existing royalty on Cameco's advanced Millennium and Cree extension uranium projects in Saskatchewan and Canada, the Saudi Arabia for uranium, from an outside industrial gas company for a total amount of $6 million. The royalty acquired is a 10% net profits interest in NPI in an approximate 20.7% interest in the projects. The royalty is payable after all qualifying pre-production expenditures incurred after the royalty is determined have been recovered. The Millennium project hosts an indicated mineral resource of 75.9 million pounds of U3O8 at an average grade of 2.39% U3O8 and an inferred resource of 29 million pounds of U3O8 at an average grade of 3.19%, making it one of the largest undeveloped uranium projects in the world. Cameco is the operator of the projects, filed an environmental impact statement and EIS application in 2009 for the project, which is expected to produce 150,000 to 200,000 tons of ore per year and has a potential mine life of 10 years. By acquiring the royalty on these two projects, URC gains access to approximately 12,800 hectares of land in the highly prospective Athabasca Basin with reputable operators and in one of the best mining jurisdictions in the world. The transaction moves uranium royalty forward and will provide nice future cash flow. The stock is worth buying, absolutely. Future exploration is important in all areas. Cosa Resources reported several intercepts of anomalous radioactivity in bedrock in the last hole of the fall drill program at its 100% owned URSA uranium project in the Athabasca Basin in Saskatchewan. Several zones of bedrock radioactivity in excess of 1,000 counts per second in the handheld spectrometer and a significant sandstone alteration intersected by drill hole UR2406 have been reported. Hole UR2404 intersected strongly graphitic basement intervals, fractured down tip of alteration, anomalous uranium chemistry in the sandstone from hole UR2403. Importantly, it also demonstrated the confirmed effectiveness of ambient noise tomography, the ANT survey, as a strike prioritization tool. Several additional target areas have also been confirmed by the initial results from the first of two ANT grids at URSA. This second drill program on a project that covers more than 65 kilometers of unexplored conductive strike lengths has significantly upgraded the Kodiak trend and the URSA project as a whole. The modern geophysical survey has proven to be a worthwhile investment at URSA. Follow-up drilling to the north confirmed that the winter-intersected sandstone alteration, structure and anomalous geochemistry are rooted in strongly graphitic bedrock that is characteristic of the current producing mines in the Athabasca Basin. The stock is also worth buying in a rising uranium environment. Meridian Mining, let's switch now to copper, gold, silver, showed further strong results at the advanced copper-gold-silver Capasal project in Brazil. Several broad zones of stacked copper-gold-silver mineralization overlain by a later stage gold deposit continue to be defined and expanded. Drill hole CD544 returned 38.2 meters of 3.2 grams gold equivalent or 2.1% copper equivalent. CD595 returned 12.4 meters of 3.3 grams gold equivalent or 2.2% copper equivalent, and the borehole 571 returned over 22 meters with 1.7 grams gold equivalent or 1.2% copper equivalent, which are excellent drill results. These results are just a small selection of the many good results obtained to date within the PEA open pit plan. Further results from Capasal are still pending. Meridian has thus tested further strong copper, gold and silver mineralization at Capasal, and 21 intercepts have returned values in excess of 10 grams gold equivalent per ton. Even after more than 100,000 meters of drilling at Capasal, the definition of high-grade trends continues to improve, confirming stacked zones of high-grade copper-gold-silver mineralization. This continues to demonstrate the importance of this advanced VMS open-pit deposit and its potential to become Brazil's next near-term producer. We agree and are invested in Meridian Mining, and honestly, great company, absolutely buying. And you can also find, of course, all the information on our Commodity TV app in German and English, as well as everything about commodities. We look forward to your like, and more importantly, please subscribe to our TV channel. Please note the disclaimer: the shares discussed are or will be part of the SSC Mining Special Situation Certificate, and of course, I'm a shareholder in all the companies. Thanks for watching us, and bye-bye from Switzerland.